Hello, Micah. Welcome to the podcast. Thank
Hey,
you
man.
for taking a little time and joining me.
Oh, thanks for having me. I'm looking forward to it.
So these days, cryptocurrency is front and center for a lot of people out there. There are also a lot of people out there who hear a lot about it and know nothing about it. And there are also a lot of people that either directly or indirectly have to deal with the taxation of these things. And I'm thrilled to talk to you because you know all this stuff like the back of your hand, and I'm looking forward to soaking up a little bit of your wisdom today. So why don't you introduce yourself
Hopefully
and
it holds
tell
up.
us about your tax practice?
So my name's Micah Fraim. Our firm is Fraim Colley and Company, and then we also operate as the Crypto Tax CPA. So I've been in practice about a decade now, and for most of that time, we've been working with online businesses or other really growth-centric businesses that have a lot of ongoing changes. Nobody likes the IRS, and I understand it, but they're in a difficult spot with crypto, especially.
Yeah. I totally understand it. So let's go over a couple just real basics of taxation for these things.
Yeah.
I think most of our listeners are probably dabblers in this field, if at all. So if you go open an account and establish a wallet at Coinbase or any of these Kraken or any of these exchanges, you buy any cryptocurrency and it goes up in value and you sell it, you have a capital gain on your hands. Is that right?
Yeah, absolutely.
One interesting nuance that I've come to understand is if you take those steps, you put $10,000 into some coin and it loses value. Usually when we do this with investments, you have this thing called the wash sale rule, where if you buy a share of Apple or shares of Apple with $10,000 and the value goes down to $8,000, if you sell it, you have a $2,000 capital loss on your hands, which is kind of helpful for tax purposes, right? But you can't buy the shares of Apple back for 30 days.
Yep.
You have to be out of the position for 30 days before you can claim that loss. This is not the case with cryptocurrency, as I understand it, right?
Yeah. At the moment, yes. The past couple, it will pipe up every 6 months or so. Some member of Congress will propose that loophole be closed. But so far it hasn't been closed yet. So that's one of the really nice things with tax planning you can do with crypto. If you hold it and you're holding it at a loss, which most people who got involved in crypto last year, which was when interest really spiked up again, most people probably do have losing positions right now. So if you have a substantial loss, then it's a really good strategy just to sell the crypto and immediately repurchase it because there's not that wash sale rule limitation.
Well put. So what about NFTs in this ecosystem? How are those bad boys taxed?
NFTs are, and I love NFTs. NFTs are an absolute nightmare right now. And the main reason goes back to a lot of the issues we have with most things crypto is that there's no NFT specific guidance. The IRS has not addressed it whatsoever. The other thing that's interesting with NFTs is that our theory, at least, is that there's going to be the use case of each NFT is going to become a big point of contention and is going to cause a lot of litigation over the next decade or two.
Right. So taking a step back at a higher level here, I think there's this, especially this year after the crypto market has, a lot of it has been cut in half or more, lost 50% or more of value kind of across the board. There's this ongoing debate about whether this is here to stay and what, the price of Bitcoin and Ethereum might be 10 years down the road. It seems to me that it's clearly an innovative new technology and more efficient way to manage a financial system. But it also seems to me that most of the coins that exist out there now are totally worthless and are going to be going to zero at some point. Where do you stand on all this? I mean, you talk to a lot of people. Your business is revolved around this, and you're engaged in it yourself. What are your thoughts on where this is going?
Yeah, I think what we're going to see, and again, it's something that the true crypto zealots are not going to be super happy with because the whole idea is decentralization and not having it in these big, I'm saying it's the same, these big centralized institutions the way that we do with major corporations now. But I think what's going to happen as regulation is getting ramped up all the time, and the reporting requirements for companies involved in blockchain are going to get more and more and more. I think what we're going to see is that we're going to see a real consolidation in the space, and we already are to some extent. But so when I'm investing, unless it's just for kicks and giggles, and I throw $25 into the equivalent of a penny stock in crypto, I think these small projects, even if they come up with something really innovative, given how expensive it is to develop the technology, and given the massive amount of money that is behind these major, top 100, 200, one of these big companies, because some of these are billion-dollar companies, given how much money they have to comply with regulation, to drive regulation to be where it wants to go, and also duplicate what tiny indie companies are doing. I would look at smaller companies almost like you're like a lottery ticket scratcher or something. You might get really lucky, but the risk on those is exponentially higher than if you're investing in one of these major projects.